Good morning, Jags. This is Fahad. Today is Friday, August 28th. Let's get started. The chart that you're seeing in front of you is Micron. And there was a question asked by a client a couple of weeks ago in the chat room. Why is this stock acting weak compared to some of the other semis? And whether this is actually a broad measure of anything, the weakness over here, and should we be concerned? And because it sort of stalled multiple times at $50 per share, and then within the last couple of weeks, even as the market went up, Micron has started to roll over. I mentioned this about 2 months ago in one of the conversations we had in webinar. And I mentioned that there was a risk that the second half earnings estimates were too high, and they probably will come down because some of the benefits that we saw in Micron that caused some surge in pricing for DR, AMRN, and ND was going to potentially roll over, and mainly because the demand surge is going to fade in the second half. And then we're going to see that impacting the second half estimates. There was only one analyst at the time, Citigroup, which has been very concerned about the state of the industry, particularly when it comes to the oversupply of DRAM and NAND and such, that they have been telling investors for quite some time that this is something to be watched. Well, at the time, everybody ignored that data. But now that the stock has started to roll over a little bit and is coming in at a major VOP support around $42.50, keep an eye on this one because there is this note out from BMO Capital today. Actually, it came out 2 days ago, and they are materially reducing the forward earnings estimates for this company. For the fiscal first quarter 20, which would be the September quarter, we now see revenues and EPS. They see revenues of only 4.9 billion versus their previous estimate of 6.1 billion. That's a massive cut in the revenue expectation. They're taking down their earnings per share expectation to half, nearly half, from $1.02 to 57 cents. And consensus, if you look at it, consensus has also slightly lower estimates, but not as much. So BMO Capital is taking it all the way down to 57 cents EPS versus the street at 78 cents. And the revenues was going down to 4.9 billion versus 5.6 billion. And for the full year, fiscal year 2021, they're doing the same thing over here. There's a 10% cut coming. So the street for the revenues is at 24 billion versus BMO Capital now at 21.2 billion. And then similarly, the full year EPS goes down to 315 versus the street at 425. $1 below the street, almost 30% below the street. These are massive cuts, not only cuts of their own estimates, prior numbers, but also well below the street. And they basically say there are multiple reasons for this, mainly that what we heard from Micron at an earlier presentation that Micron had made with respect to weakness in its business and specifically for the quarter due to additional incremental negative near-term commentary we heard during the company's presentation at a technology summit. Remember, I discussed this briefly also a couple of weeks ago when I said that some of these comments are basically not positive. Now, I wonder if this will have some sort of a spillover effect on some of the other semis like Lam Research and such, the ones that may not be benefiting as much from the 5G trends, but something to watch because this is the kind of stuff that could potentially spill the negative tone on the entire semi sector. I don't expect that. Maybe this is one stock specific situation, but you never know. So you got to watch these things because one bad apple could potentially ruin and bring the entire sector estimates down, especially when we are concerned about headwinds across the sector, as the company was highlighting, and the inventory oversupply, as we heard previously. There's a major VOP support around 52.50 round figure. If this thing starts to break down through that, then this stock could be in trouble and may actually go to retest some of those March lows around $35 per share. Looking in pre-market, this is not moving much. It's only down 10 cents. So really no movement in the stock despite BMO taking the estimates down. So that's one stock. And the next one I want to quickly cover is Foot Locker. A very quick view and basically a technical view and nothing else on this. So if I use my stock charts to show what I'm looking at on my screen, purely technical over here, Dick's Sporting Goods, symbol DKS, reported earnings 2 days ago, and the stock blasted higher by more than 15%. And it seems to be holding rather very, very steady. And they talked about the e-commerce materially gaining traction. And as a result, they saw overall business trends actually improved, which was quite surprising. I did not think that Dick's Sporting Goods would have such a beautiful benefit of the e-commerce benefit like some of the others, even though the stores were closed. Nike has been also reporting really good numbers. All these trends seems to highlight to me from a high level standpoint that Foot Locker is likely also seeing positive trends and commentary on the spending. When I look at this chart, purely from a technical standpoint, this has a setup for a breakout to $31 per share. Especially if it starts to take out $30 per share, then I think you could see a quick push towards 31. And if it really takes out 31, then I think this could be this could be on its way to 35 to 36. So there could be as much as 15 to 20% upside coming in Foot Locker. Take a look at the volume profile in the last couple weeks. So there was a massive high volume push higher here in Foot Locker. This was before earnings came out, so this was in early August. And then a couple of weeks later, after earnings came out, there was another massive high volume push higher. So twice now it has attacked in the recent weeks this major VOP resistance. If it takes out 31, I think the stock is going to fly and could get all the way to mid 30s. Looking over here in Foot Locker, you can see where this VOP congestion comes in. So if it starts to take out this $31 resistance right over here, then look at the air pocket above the stock, and there is big air pocket all the way to about $38 per share. I think the stock is going to make progress into this air pocket. So keep an eye on this. There could be a lot of ways of trading weekly call options, and we're going to be monitoring the option activity closely. There's a ton of penny wide weekly call options, so very, very easy trade to place over here. That's it from me. Jay?
Morning, everyone. Today, taking a look at Cracker Barrel, CBRL. Now, Fahad, you covered a couple other casual dining stocks on Wednesday, Darden, Bloomin' Brands, for example. So this stock can certainly apply to that theme you talked about. But the reason why I'm bringing this up is because yesterday there were small buyers of 1,000 January 190 calls for approximately 45 cents. So a $45,000 bullish bet. Open interest jumped from 809 to 1,821 today. But look, the stock closed yesterday at 129. These are targeting the 190 calls. There was a note earlier this week from Truist, which is formerly SunTrust Robinson. They found that as of August 13th, on the company's website, 80 stores were offering beer, wine, and mimosas. This is an alcohol initiative the company is undergoing. And this 80 number is an increase from 20 back on the June earnings call. They're selling glasses of beer for approximately $4.50, wine for $6, and mimosas for $6 as well, which is significantly higher than the $2.79 average for your soda, lemonade, juice, whatever. And when you consider, let me actually show you a quick chart. The average check for this restaurant, and compare it to the other casual dining peers, they're only running at $10.84. So alcohol sales could have a material impact on the average check going forward, especially if they continue to add to more stores, which is more than likely going to happen.
When did they start doing this? When did they start?
Well, on the June earnings call,
Okay.
they had a test of 20 stores. And then as of August 13th, that number has jumped to 80. And the last thing that Truist points out is adding alcohol could boost sales to millennials, which according to their last data point showed that millennials accounted for 33% of guests in the store, albeit at a smaller percentage of sales. So keep an eye out for this initiative going forward.
That's very interesting, and I can see why that would certainly push the average check at this restaurant higher. Look at the comparisons here. Only $10.84. I didn't realize it was this low. But I guess now, because so many people go there for breakfast, or there, if you ever actually go to Cracker Barrel on Sunday and get their I forgot what it's called, home style chicken. That's what it's called, home style chicken. Oh my gosh, that's so good.
Mhm.
Um, who knows? Get some chicken and get a beer along with it. I could certainly see that average check going higher from here. And especially with the view that we discussed in conversations a couple of days ago with the dining space coming up, that certainly helps. And this technically looks fantastic, no question about it. It's running with the space. We discussed blooming brands, we discussed the Darden restaurants. The entire space has started to break out all of a sudden. 150. Let's see if it makes it that far. It's huge air pocket over here. You can see because of all of this crash that happened in March. Long way to go to 150, but it may get there. Very high volume push higher yesterday with a power candle. Nice update. Chronicle.
Morning, everybody. Two things this morning. First off, fun fact, I've never shorted Apple in the past, but I'm kind of tempted to fade it right now for quick gains because
Okay.
I'm seeing several signs that tell me we could be seeing some sort of pullback. Nothing to do with fundamentals, but more a combination of what I'm seeing in technicals, internals, implied volatility, as well as sentiment. I think it's worth a shot, not just because technicals look stretched, but also because I'm starting to see an unnatural rise in implied volatility across the Apple option chain this week. Because if I'm gonna bet against a behemoth, I have to ask myself how I'm gonna time it. And I think this sort of sudden and strange rising volatility that I'm seeing in Apple options, that to me is a strong signal when combined with the stretched technicals. I remember seeing this sort of quietly rising volatility in the FANG stocks for several days straight leading up to the crash in late 2018. Not saying there's going to be a crash, but I'm taking this as a sign to be vigilant. So that's my first thing. Second thing I have is Canadian Solar, symbol CSIQ. Disclaimer, I'm long the stock and I've added to the position once already. And I think any pullbacks going forward are going to be further buying opportunities. So my bull thesis has been their low equipment costs and rising margins, plus a lot of their smaller competitors getting killed. And even though new competition has risen lately, I think the overall pie is getting bigger and it hasn't affected margins. There's also the secular bull story, of course. Like IEA is predicting global demand next year to be 155 gigawatts, up from 125 this year. And during the company's earnings a couple weeks ago, management said they're expecting a 65% increase in gigawatt shipments in 2021. And they're saying most of it is going to come from unsubsidized demand. So it's becoming mainstream if we read between the lines. And based on their channel checks, they're seeing a quote unquote sharp re-improvement in demand across most of our end markets, including the US, Latin America, Europe, Japan, Australia, and China. So this secular story has always been my thesis, nothing surprising here. But overnight, I came across this strong buy initiation from GLJ Research that mentioned something I hadn't considered, which is the company's growing intent to pursue a China IPO of its systems and modules business, which makes a lot of sense because Asia Pacific is by far the majority of revenues for that segment. Right now, all they've said is they're thinking about it, but if we start to get headlines that things are moving along, that would be bullish even if the listing process is going to take a while. And so this is sort of a hidden catalyst to go along with the more secular bull case. So CSIQ, I think pullbacks are a buy.
Yeah, I like that too. I really like this one actually. First of all, mainly because now I haven't really, looked into CSIQ in particular, but I actually love the space, and I think that that solar space in general has tremendous amount of room to run. This actually has been my view for the past year and a half now, year and a half to 2 years, ever since when I first started to endorse the bull case on Sunrun. It took a while for that stock to finally get some traction. But the key message that I highlighted in Sunrun, and look at this, where this thing is now, is like $52 per share. This was at $17, $18 per share when I was endorsing that bull case in the Real Vision video. And it was that I think people were underestimating that when California solar mandate kicked in, which made it a requirement that for any home dwelling of up to 3 stories or less must be powered with solar panels in order to basically prevent these power outages that happen. And over the years, the whole estate will basically get into that direction, and hopefully they can overcome the problems that they have with power outages. And this is a massive theme in California. Now, combine that with in post-COVID world, we have seen sharp acceleration in home construction, and existing and new home sales are up dramatically. Prices are also rising. So naturally, that has put a firepower underneath the solar stocks. And on top of it, if we get Biden-Harris administration come November, that's going to be also very, very positive for this industry. And I think that a lot of the other states will start to copy what California is doing. Particularly New York had also some legislatures on the commercial side of the business that was trying to do the same thing last year, and I think those can now come back to light. So the entire space is really good. I like First Solar, I like Sunrun, I like the CSIQ update that you just provided. Pullbacks will remain shallow, but I think all of them have more upside. Good stuff. Avo.
Morning, everyone. Looking at AMRN this morning. Yesterday, there was a couple of questions in the chat room about it. Just didn't get around to getting my a firm grip of what was the reason why the stock went up yesterday. I'm
This
still not
stock
sure.
still has a
What's
this
that?
this still has a heartbeat. I wasn't sure.
Yeah, it appears that way.
Okay.
Speculative heartbeat of some sort. I did see a large call buying out in January 2022 strikes, but I think they're tied to common because there was at the same time a sale of something like 60,000 or 40,000 shares. I can't recall. I didn't write down the numbers, but in any case, a couple of things going for it. First off, Piper Sandler initiated the shares at $21 price target. This was on the 25th on outlook going out to on Vasepa sales with European approval pending in 2021. So that was the number one thing. Number two is apparently they have an update on final results of evaporate study. This is for atherosclerosis, which will be presented tomorrow. So on Saturday morning, or actually would be sometime late this afternoon because it's European. So yeah, so it would be late this evening. In any case, it should be after market close. So there's that coming up. And also on September 2nd, they will begin oral presentation or oral arguments for their Vasepa generic the appeal on the generic drug versus the Vasepa. So I'm not a legal guy, so I don't know exactly how long this process would take, but it begins on September 2nd.
That right there is the key, honestly, because it's a good reminder to everyone that the whole reason why this thing absolutely collapsed was because they lost the patent fight, and which basically means that the business is done. That's the only product they had, Vasepa, right? And Vasepa is made off of fish oil, and that's not something unique. And so when they lost that fight, it was done. And generics can move in all kinds of, in the pricing power erosion that happened, all kinds of stuff. I don't think there's any question for in anyone's mind whether Vasepa works or not. Everybody knows it works, but this company is not the beneficiary of that anymore. That's where the problem comes in. I'll give you a quick update on the technicals over here, because in this particular market, we have seen when all the Robin Hooders basically start to pile into something, they can take stock higher 50, 100, 200% out of nowhere for no good reason. Purely technically speaking, these high volume spikes are signs of potential accumulation patterns. And they're appearing with the stock also starting to break out from a large basing formation after 6 months. And if this continues for a couple more days, yeah, I could see this thing push towards $8, maybe $9 per share. But fundamentally, honestly, in that fight that's going on, it's not going to end anytime soon. And I don't know if the company is going to benefit from this anymore at all. They need a brand new category of product. They need something completely new, unique for themselves. And there's nothing in the pipeline that I'm aware of. Any more
No,
ads?
I don't think they have. Well, aside from that second study for a different indication, but this is, like you said, this is more of a technical play at this time, and I don't know, might be worth throwing a few cents there. Maybe not
Yeah.
all of your children's education fund, but who knows how this one
Yeah,
goes.
very speculative, but again, if you catch some of this move, why not? Sometimes these things can just take off, get a life for a couple of days, and they fade hard, and then it's done and it's over. RSI had a huge jump on this high volume. You can see that too. The RSI actually went from 47 to 67 in a matter of just 2 days. So the relative strength that spikes like this is also telling you there's a bit of a push behind this. So watch the weekly options on this, see how far this can go. All right, good stuff, guys. Thank you very much, and we'll see you in the chat room shortly.